Hi, this is Dr. Scott Young, and today we're going to get into how to watch some of these other videos that have interesting information. Now, on Monday, there was a massive stock market crash worldwide. I kind of expected this, that we were going to have a recovery on Tuesday, and of course we were. Now, here's the thing that messes with people when they hear this. They see, and I'm going to show you a video. We're going to talk through that video here, okay? But when they see a crash, they're like, "Oh my God, no, is that the EBS?" And first off, a couple things that are happening, and you're going to see some of the information I'm going to talk about as we go along here. But stock markets are reactionary. They're not response driven. Let me back up and explain what that means. Let's say your wife, husband, friend, boyfriend, whatever, right? Pick that person. Says something that kind of ticks you off. You can do two different things. If you react to it in the moment and they get you at the right time, you're like, and you're at their throat, right? That's called reactionary. But if you pause for a second, if you ever watch the TV series Scrubs, Perry Cox is sit there like 1, 2, 3, and he's like has to count to 10, but try not to get mad. And so if you will respond to that by pausing, and many times, I'm not perfect at this, okay? I struggle with that sometimes. There get things and I'll get like steamed up and my rage gets in a roll, and especially on some business issues that someone's trying to screw me over kind of thing. And I get like all pissy on that kind of stuff. I get it. But stock markets are reactionary, just like that little pissy moment. Okay. They never respond. And so some people will say, oh, the stock's got to crash, which is one of my least favorite words in the history of the world. I hate that word. Crash means to fall down to the ground. I mean, the stock market at 40,000-ish, and it's going to go down to 10,000. I mean, lose 2/3 of its abilities or 3/4 of its abilities, whatever. Well, that would just totally destroy our whole economy down to the ground. Now, some of you are going, oh, we should do that. Yeah, do that. And I'm like, you want to like make everything ultimately worse and unfixable? That's what would happen. So don't think about stock market crashes, number one. Number two, you have to understand this from that reactionary mode. So again, they're not responding first. I've always said EBS, then from this standpoint, the reaction would occur. But I have a funny feeling there's going to be a stopgap to the reaction. You're going to kind of see the thought process of this guy. So what Jack is thinking about. Now, what I want you to think about too is this is another way of considering this is Revelations of the Red Pill, which we talk a lot about in Asara. It might give you a perspective on things. It was written a couple of years ago, but it's still relevant today, I believe. And so I think you go to drscottyoung.com and you can kind of see this, okay? But I want you to realize stocks are reactionary, just like when Scott gets all pissy, okay? So you feel that same thing too. And if you're smart, you don't react, you respond, okay? So that's something you have to realize. So what occurred on Monday was a response. Now, it was a response to global issues, but it was a bit of a planned response and not a reaction. So let's just think about that a little bit as we go on here. So I'm going to show you some of the video. I kind of caught it in the middle of this. I cut some things that were not fully relevant to that.
Taiwanese stock market today. This is what happened in the Taiwanese stock market today. This is what happened in the British stock market today. And this is what happened in the American stock market today. All around the world, stock markets took a tumble, and almost every single big stock took a big dip. Well, except for one, but we will get to that. But let's start off with where this stock market collapse began, and that is in Japan.
Okay. So what we're going to talk about here, and we talk about this, is that he focuses on Japan. Now, this is a big deal for me because, I think I've shared with you somewhere around 3 years ago, I was working with a financial planner and he fired me. And the one conversation I brought up is Japan that you're watching on the screen here. Japan has been running at a massive level of debt for a very long time, and he gives a good explanation of that kind of debt here. So let's watch that as we go along.
You see, Japan's stock market didn't just have a bad day today, but it had its worst day in almost 40 years. In fact, it crashed worse today than at any time during the pandemic. The only other time it was worse was...
Think about that for a second. If it drops worse than the pandemic that they didn't really know about, they sort of did. Okay, don't get me wrong. But they really didn't know about, think how this is actually coming out. And it hit all the markets. And you're going to see it. And don't react. Let's listen to it and respond in the correct way with it too.
Black Monday in 1987, an infamous day when the world lost trillions of dollars in the stock market in just a few hours. But why did this happen today? Well, there are a few hypotheses. One is something called a carry trade. You see, Japan over the last few years has actually kept their interest rates low and have experienced very little inflation. And so, what a lot of very big corporations and Wall Street firms have been doing is borrowing tons of money in Japanese yen with low interest rates.
Okay, so let's pause for a second. If you have a massive amount of debt running at, they have been running at 160, 175% debt to income ratios. Remember, I've told you before, if you're at 30% to 50%, you qualify for bankruptcy. Now, when the American government is pushing into the 100 percentiles and farther, actually, I haven't done the math on it here recently, but we are pushing toward that level. They now are pushing at 200 and 210%. Now, if you don't have to pay the debt, meaning the interest on the debt, because all the countries don't pay their debt down, they only pay for their interest. Now they might minutely pay down the debt a tiny bit, but they don't care about the debt because they would just go through another bankruptcy phase and wipe out the debt. That's what Great Reset is. Did you catch what I'm saying here? What the Great Reset was supposed to be is their own debt forgiveness point. Yeah, they would throw a bone to you by killing off your student loans, which many of you go, I don't have a student loan. I understand, but they would throw a bone to some of the people, but they would fracture the population because of people going, hey, listen, I've already paid off my student loan, or I never had one. And then some young kids who didn't do anything, have been doing gender studies, are now getting a bone thrown at them, right? It doesn't make sense. The reality, what the Great Reset would be, is to wipe all of their debts out, but you get screwed. And that's how that thing works. So that's why he's saying this. What most people were doing is buying yen, going in and buying yen because it was very cheap. So they were buying the currency of that kind of thing. Okay, let's watch that more.
Rates, and then taking that money and investing it in other currencies and stocks of other countries like in Australia and the US that have...
So again, what countries, let's say, China was going in and buying the yen, then taking that yen and going and buying the Australian dollar or the American dollar. And they were making money. So that was kind of keeping the economy going, even though the debts were happening.
much higher interest rates, pretty much meaning these large investment firms borrowed cheap money in Japan and have been using that debt to invest in the United States. And it's estimated that between 5 and 10% of the entire American stock market is on this kind of carry.
Okay, that's just crazy. Now, 10% is built off of a carry account, which means right there, that is part of what I would call a crash, okay, or a reduction. It has to at least go down by 10%. He's probably closer, more 10 to 15%, but we'll just say 10% for the heck of it.
Trade. But what happens when that cheap money from Japan has their interest rates go up? You see, Japan has not raised their interest rates since 2007, meaning that they have been a safe bet to borrow cheap money for nearly 2 decades. But in March, Japan raised its interest rates for the first time, and they did so again just.
Isn't that funny? It went up in it's the first time it went up in 17 years. Do you see the calm there? 17 is the letter what? Sound like I'm in Sesame Street. Right? So, pretty funny. Okay?
5 days ago, meaning that now all of the Wall Street firms and financial institutions that have been relying on Japan's cheap borrowing cost now are worried that their payments will go up on their debt.
See, here's what happens. If you bought the yen, you've been investing with it, and you're in the middle of your investment here, and you don't have the ability to sell off the stock or this particular using that very cheap money. Now, when the money becomes much more expensive, you're paying on the yen, and you're also paying on the American dollar, and you're doubly screwed. You've got two different sources of people, or in essence, two different sources are coming at you and saying your debt is coming due, buddy. Oh, scary. Okay. You see, when you actually have a debt and then you add, another level of debt collection, like your house, you can't really afford it. So you get a second mortgage just to pay some of the other debts. And then when you use that debt up and then you go back to your credit cards, now you've got your house, your second, and your credit cards going, and it becomes like, no, I can't do this. That's what the world is saying right now. That's what they're doing. Again, it's a response.
Or that they will no longer have access to cheap money for future investments into the stock market. And one person who may have actually seen this coming is the renowned investor Warren Buffett.
Okay, so listen, they're in love. I mean, Jack's in love with Warren. Okay, I don't know if he really is in that way, but you get my point. We always want to talk about the renowned investor. Watch how much he has in cash. It makes no sense if the dollar's worth a big old fat zero. It's worth less than it ever has been. Why would you have an investment in just cash? I'll explain that, but listen to this a little bit closer.
A man who has been known for outperforming the stock market for about 70 years. Well, he decided
he's piled up $200 billion. Now, he intimates a point, but then he kind of backs off it in a second.
To cash out pretty much immediately after hearing this news out of Japan. Now, this could have been a coincidence because he has been cashing out slowly over the last 12 months, but 4 days ago, he nearly doubled his cash position, meaning that he expects some sort of market correction or collapse in the near future. And that brings us to the...
And by the way, that's exactly what these idiots do, especially in 2008. They do it in 2000. They did it in 87. They did it in 29. They cashed out of their own stock, right? Because they knew it was going to crash several days before, which is the same thing I've been telling other people. Hey man, move your money to a money market. It's just a cash position. And that's one way of doing that. I had a lot of stuff in my cash position until I finally moved it over into gold. Okay. And I'm not trying to play a financial advisor. I'm just telling you what they do. Okay. But you're going to see through this, the silliness, okay? Because if you're Warren Buffett, that is way too much cash. And I'm going to explain that in just a second, though, okay? But let's listen a little longer.
Next point about why the global stock market appears to be showing signs of collapse right now, and that is fears of a real recession. You know, one of the interesting tidbits I always bring up is that after World War I, the world was expecting to experience something like the Great Depression. Essentially something terrible.
Okay, so what he's saying is that every war, there tends to be they want to have a drop-off. Because they made money from the war, now the people come home and they want to see the drop-off so they can kind of take more of the funds away. But something was weird. They had the Spanish flu. What, 20 million people die from the Spanish flu? That was probably from a little shoddy thing, right? And then suddenly it was over. 20 million people die and it was over in a flash. And then you get into the Roaring 20s. Didn't make sense. That should tell you something. If it doesn't make sense, it's definitely a cabal idea.
Was supposed to happen after the war and the Spanish flu decimated the world population and global industries. And one somewhat brief recession did happen in 1920 and 21. A single-year recession that was fairly quick but also a very large downward spike.
Okay, so let's move on because I'm going to kind of move it forward here a little bit. Then he's going to talk a little about depression.
Economic downturn in modern history. A horrible economic decade that essentially needed a world war to take the world out of this economic downturn.
The Great Depression needed a world war to get it out of the depression. Do you see the response level of this? This is called the way the cabal likes to do it. They respond to things. They don't react for the most part. This is the response of it. Now, the world's reacting to it, freaking out. But I want you to see beyond this. I want you to be able to kind of be chill and see this is a type of response. But in essence, it's going to be even cooler when you realize this in the near future.
And now, today, investors fear we may be following a similar pattern. We experienced a brief and sharp downturn in 2020, then asset prices skyrocketed for the better part of 3 years.
And in those 3 years, were we doing better? Why is the stock market going up? And yet our prices are in the inflation, the money supply, the debt, everything doesn't feel right. But the stock market from Joe Biden-y time frame has gone up just a dramatic number, 30 to 40,000. And he goes, I did that. I'm the greatest. And the answer is that was fake. So if just think about 40, right? And 20%, 20,000 would be half of the value of it, right? The stock market has gone up by 25% in one of the worst timeframes you guys have lived through in your lifetime, in 2021 and beyond. You weren't financially better, but the stock market is making 25% gains over in that time frame. It doesn't follow. Which is why, for instance, Mark Z and I have said over and over again, we think that there's a correction of 25 to 35%. That's why it has to correct, just to get back into reasonable ranges, which is right here. Now, down the road, post-Nasara, we're going to see something even better, but this doesn't make any sense right now. It should never show this kind of thing. Now, for it to go from here to here and then come back up to there, well, that would be fine, and then say a steady little curve. But frankly, if it was following with what should have happened, it would have been going down and down and down past the 20,000 barrier. Then it would have been reasonable. But this is trying to tell you there's some massive over manipulation going on because they've been trying to make money left and right because this was one of their only ways to make the money.
And now there are some fears we might be heading into a very long recession. Now, if you follow this channel, you know that a lot of countries like Canada and Germany have actually been in a GDP per capita recession for a few years now. However, high immigration numbers are making the total GDP increase, therefore governments and Wall Street are able to say that the whole economy is growing and everything is fine and dandy.
Well, you know that's not true. Okay, so let's move forward a little bit. We're going to kind of give you an idea. You can go listen to his video.
Bonds. Normally, long-term bonds have higher yields than short-term ones due to the greater risk over a longer period. However, during periods of economic uncertainty, investors prefer the safety of long-term bonds, leading to higher demand and lower yields on these bonds compared to shorter-term.
Okay, so when you hear bonds, I mean, some people go, right? I mean, it's like, I don't know what that means. Okay, let me explain what bonds are. Bonds are basically a way for you to buy into the government's ability to make money. Simply put, that's the Scott version. Okay, you might, well, I don't agree. Okay, I'm just telling you a way of U.S. bonds. It junks together into basically the Fed, but it's called Treasury bonds, right? That's the legal way of doing it. The Treasury sells it. They don't make any money off of it. Who makes the money? It's the Fed. So that's how that kind of thing works. So, but if you're buying into what the government's doing, you're not making money, but see, they're faking it, and then they just keep printing more money. So are you really making an asset? And then go backward in your mind and say, wait, why would Warren Buffett want $200 billion in cash when cash is worthless? Executive Order 13818. If you have crimes against humanity, I'm going to take your wealth from you in essence. I'm going to bankrupt you. So he gets out of his positions in the world and he has to give it back to the trusts so the people can use that money. So cool. All right.
Now that is all a mouthful as well, but essentially all this means is that investors seem to think the USA has a lot of uncertainty in the economy right now, and these investors demand a lot of return in order to invest in short-term bonds because they view it as a very risky investment.
Okay, so then he kind of moves in, and we're going to move forward a little here. I'm going to give it a little space there.
Consumers seem to be spending more, even though a lot of the spending is coming in the form of debt. And if economic conditions...
Okay, so people are spending more, but it's coming in debt, right? What did I just say? Let's say, again, you had a mortgage and you had credit cards, right? So to manage your credit cards that were getting up in high interest, you got a second interest, a second mortgage, like it's called a HELOC. Okay, and they say it different ways. That's why you can't always talk to bankers in the way that you would think. I've seen so many people go, well, I asked the bank if they did the QFS, and they said they don't do that. I'm like, because you're not using the same words that they use, right? It's like talking to an offensive, an offense in the NFL, and they'll tell you X jet, Y, Z, cross. And you're going, what was that? I mean, I'm making up something. But it doesn't follow for you, right? Okay. What they're saying is that you took your credit cards, you refinanced it in your second mortgage. Now you've used all your second mortgage. Now you have to fill your credit cards back up, and you're doubly screwed. This is what's happening. This is why these people don't get it.
Get poor enough where the average American can no longer afford to pay back something like their mortgages, well, then we have the 2008 financial crisis all over again. Now, those are just the recession fears, but there are also a few other very strange things going on right now, and one of which could be a major concern going forward. First of all, the VIX, which is a volatility indicator in the stock market, has spiked to such a high that the only time that it was higher was when the pandemic started and they announced the virtual shutdown of the entire economy. So that number, that volatility number being so high, is a very worrying sign that investors are extremely uncertain about the stock market's future in the near term. But one thing that kind of started this video is actually one company that skyrocketed in valuation over the last 24 hours or so when all of the global markets were melting down. What was that company? That company was Lockheed Martin. the largest military company in the world. Initially, Lockheed Martin stock rose by over 20%, signaling that some investors somewhere began to see a lot of value in investing in the American military. Now, eventually that stock did fall down back to earth, but it brings us to the next point, and that is that there is a fear in the financial markets that there will be a war. You see, the war in the Middle East is showing some worrying signs lately, one of which is actually Turkey. Turkey's Erdogan stated last week about how he could send troops to help in Palestine, and if right now the government is on track to actually run out of money pretty soon.
Okay, I cut it there. So I want you to see this little portion. And now remember, the debt clock is manipulated, but there are a few key figures that you can get out of it like this.
In fact, every 100 days, the US is adding $1 trillion to the debt, and it's only getting worse. Programs like Social Security, which were put...
Okay, so let's kind of give the sum up of here, okay? What happened in Japan that went out throughout the world, they saw a massive dump. Now, stock markets, and we're talking it's 307 at this point in time, and the stock market is up by 294. Okay. Now remember, they were off by almost 1,000, so they really haven't recovered. They may have recovered what, 30% of the losses, 35% of the losses, right? That's not a lot to come back because they can't really come back, and it doesn't make sense. It doesn't follow with the capability in there, and so that tells you. And Warren Buffett went off and sold out and got cash. Doesn't make sense, right? And then Lockheed Martin goes up, okay? And that goes up 23%. It's one of the only ones where all the tech stocks went to heck in a handbasket. What? Right? I mean, it doesn't fit. So what I'm trying to tell you is they were responding because they want you to have a war. They want to do a war. And by the way, they're even telling you, Speaker Johnson is telling you that if Iran goes and attacks Israel, we're going to go to war. And I'm just saying, the EBS has to come with a scare event. Don't ask me which is the scare event. I get this all the time. Which one is the scare event? Well, could it be Taiwan and China? Could it be Ukraine and Russia? Could there be like a nuclear event or a fake nuclear event? Or could it be like, stop, don't worry about that stuff, okay? This is part of the scripting of their movie, the stuff that's already been actually dealt with. And I know that sounds crazy. Everything hasn't been dealt with in ways of this, but this is part of that movie thing that you just got to be calm with, okay? This is coming to a close. It's not yet. Remember, markets will drop reactionarily, and when it really does, see, after the EBS, you're going to start seeing a not a crash, but a tanking event. Could be 20-30% or more. And they won't have any stops, because nowadays we've seen this the last 20-30 years, whatever it is, where what would happen, and this happened in 9/11, stocks would go down 7%. They would close the markets for 4 hours. Robinhood, who was a part of that shorting scam of the GameStop kind of thing, and all these Reddit readers went off and got together and bought the stock and screwed up the Robinhood. Well, they bought it through Robinhood, but they screwed Robinhood and a whole bunch of other things. And there's all kinds of stuff going on to these companies like GameStop, because all these other companies were trying to tank GameStop. Well, then it started to keep up, and they caught them at their shorts that they did. This is so fascinating when you realize it, but don't worry about that too much. But did you know Robinhood right now has been shut for 24 hours? Many of the trading platforms of like E-Trade and Ameritrade and all those other ones that you could go online have been down for a while. This is a response. This was a prepared response the cabal wants to do. Okay. At the same time, Joe Biden goes on, I want everyone to realize that I cured the economy. Cured the economy? You're the one that killed it. Like, right? On top of it, Kamala went off and got the Minnesota governor, who was one of the most corrupt and worst governors out there, and an old white dude. Like, does that make any sense to you? Like, there's just numbers of things going crazy around you. You need to get into your calm. Get into your calm. Realize it's going to be okay. Get into some prayer. I promise you, it makes a big difference for you with that too. Guys, it's coming. We just don't have that clue when, but there are billions of issues going on because there are 8 billion people in the world, right? There's billions of different calculations going on all at once, and it feels like this. You need to feel like you're in a flow, okay? When you feel like you're in a flow, because God has got this figured out. He's been talking to people to get this thing solved. We're going to be okay. Thanks so much.